Good morning, everyone, and welcome to K-Market Insight. I am your host, AI Captain. Today, we are deploying version 5.1 of our 24-hour predictive model. We are facing unprecedented conditions in the South Korean equities market, requiring strict, data-driven discipline. Today's briefing will dissect yesterday's severe volatility and outline actionable quantitative strategies for the next 24 hours. Let's begin. To understand today's market, we must accurately diagnose our current microstructure phase. We are firmly in phase 2, characterized by initial macro shocks and intense FUD, fear, uncertainty, and doubt. It is critical to understand that this is an overshooting phase driven by liquidity vacuums, not a systemic collapse of corporate fundamentals. Looking at yesterday's recap, the numbers are stark. The KOSPI suffered a brutal 9.99% drop, forcing a market-wide circuit breaker. The primary driver was a massive, synchronized exodus of foreign capital, resulting in a net sell-off of 6.24 trillion Korean won in a single session. This was a classic capitulation event. This exodus was not isolated. It was triggered by a chain reaction of macro coupling. Global consensus is shifting rapidly towards aggressive tightening, pushing the U.S. 10-year Treasury yield to 4.45%. Concurrently, the USD to KRW exchange rate violently breached the critical 1,531 mark. Furthermore, global investment banks restricted leverage on tech sectors, forcing a structural liquidation. Therefore, our regime declaration is clear. Macro and sentiment factors are completely overriding micro fundamentals today. Beneath the macro sell-off, a critical structural shift is occurring in the semiconductor space regarding high bandwidth memory, or HBM4. The top two giants are diverging. Samsung Electronics is executing an aggressive volume expansion, focusing on time to market and market share capture using their 4nm FinFET process. In stark contrast, SK Hynix is pivoting towards margin optimization, reallocating capacity to DDR5 and LPDDR5. This divergence is forcing institutional portfolios to aggressively rebalance their tech weighting. Our AI model has identified 3 dynamic chains dictating today's flow. Chain A is macro, the surging FX rate directly triggering foreign sell-offs. Chain B is sector, the HBM4 strategy divergence causing intense intraday friction between Samsung and SK Hynix. Chain C is sentiment. The crash in single-stock leverage ETFs has prompted regulatory clampdowns, margin hikes, and subsequent retail stop-loss cascades. These 3 chains are operating simultaneously. Running these chains through our Bayesian updating model, the base case scenario at 65% probability points to continued high volatility and negative bias as foreign rebalancing and retail margin calls overlap. The bear case sits at 20%, triggered if U.S. yields cross 4.5%, which would ignite further ETF liquidations. The bull case is limited to a 15% probability, requiring significant institutional intervention and FX stabilization below 1520. Here is our actionable plan for today's session. First, overweight defensive sectors like telecom and power, or rotate into short-term policy proxies like quantum computing. Second, for advanced desks, consider a spread trading strategy. Long the market share aggressor, Samsung, and short the margin optimizer, SK Hynix, as a paired hedge. Most importantly, risk parameters must be tightened. Maintain cash levels above 50%. Do not attempt to catch the bottom on leverage ETFs. Finally, we must highlight the dangerous divergence between smart money and retail flow. Yesterday, retail investors poured over 7 trillion won into top tech stocks, blindly buying the dip. Simultaneously, foreign institutions executed a 6.24 trillion won exodus. This is a classic retail trap. Until the leverage unwinding is fully completed, buying this dip is akin to catching a falling knife. In conclusion, proceed with extreme caution today. Capital preservation is our absolute paramount objective. Do not fight the macro tape. Thank you for joining K-Market Insight.